This is our first Bay Area Housing Market Town Hall webinar in 2023. Now, to start off with, reminding everybody to subscribe on our YouTube channels if you want to get updated on the recordings and also past recordings for our episodes. We did quite a few since 2020 March. So today is our 38th episode. We have tons of information, and especially if you're interested in commercial real estate, for example, multifamily, we do have some workshops that we have on the YouTube channel as well. Okay, let's get started. Bay Area housing market stats. I keep hearing a lot of buyers been complaining that there's not enough inventory on the market. As you see that this is around December, January time where we have a bit less than 4,000 listings in these 5 counties: Alameda, Contra Costa, San Francisco, San Mateo, and Santa Clara County. But if we're looking and compare to last year, a year ago in January, we're really not that much less. We actually have slightly more than last year, January 2022. But then if you compare January 2022 versus January 2021, we definitely had a huge drop. Compared to 2021, we had a lot more listings compared to 2022. And hence, if you remember, the first 4 months of 2022, the price had gone up so quickly. And then in 2020, in January, before COVID started, or before the whole market shut down, we had a little bit less inventory. So if you compare 2020 and 2022, we are less than 2020, but we're not that much less, I would say. And but then the huge change is really between 2021 and 2022. But if you're looking at in terms of number of sales, so okay, we have lower inventory, but then number of sales, this is where you see this huge drop. And this is the reason why, even though we don't have a lot of inventory, which should drive up the price, right? But we also don't have a huge demand. A lot of buyers are really sitting on the sideline, kind of just waiting and to see how the market is doing. So that's why you see this huge drop on the number of sales. Let's look at the months of inventory. Interestingly, we went from a very tight market to relatively, I would say that it's not as tight anymore, like up to 2.3 months of inventory. But we have been sharing with you guys that a normal market actually is between 4 to 6 months of inventory. So we're still in a pretty, relatively speaking, a little bit tight inventory if we compare to a normal market. But in December, we went down to 1.5 months because of that tight inventory. And then in terms of like median number of days to sell, as you see in December, we went from beginning of the year last year, less than 2 weeks, almost pretty much a week to sell, all the way to 25 days. This December, I have to say from personal experience, it's like my first time in years that we can actually take a break and vacation without really working. So I'm just sharing this with you, showing you how slow the market has been. So it is really not normal for us for the past 10 years that we actually can take a break without really working. Typically, we are still working during the winter break, despite it's a slower market. And in terms of like how competitive it is, well, we are finally went below 100% of the list price. People are really offering below asking price nowadays, even though in the past few months it's been slower, but you see that the median sales price to list price is still over 100%, but we finally went down to under 100% in December because the market was just so slow at the time. Now, we look at this every month. We look at how many listings have been withdrawn and canceled, and you'll see that the number of listings withdrawn peaked at around June and July and August, and then it just started to come down. But then in December, we started to see them people kind of pulling their listings off the market again, because as you know that if they cannot sell it by December, they would probably decide to just pull it off the market until January. So we should start seeing a little bit more inventory in January, or actually I would say February, because we've been having such rainy days. And then yesterday and today, finally, I was like, wow, I feel like I missed the sun. We haven't seen the sun for so long. So for the month of January, it has been a bit slow as well because of the rain. In terms of like list price decreased, and then you see that in July and August of last year, this huge jump of like how many listings had dropped their prices. This is the time that where a lot of sellers realize that, oh wait, the market is changing. Now we have to start dropping the price. But we start seeing much less sellers are dropping the price. Now they have a complete different listing strategy, meaning that they might try to list a little bit lower, but then more realistic number instead of before they still try to fetch for that April and May's number, but then they're not able to get it, so they would lower their asking price. But right now we start seeing a lot of sellers are much more realistic in terms of their asking price. And how many transactions fell through? We only have 77 compared to all the 3 digits in the most of the year. So only 77 transactions actually fell through. I would say that this number is not really because everything has been going so well. It's more because that we just have so much less transaction in December, and that's why we have less transactions fell through. We just really don't see that many transactions fall through out of all the 5 counties. In terms of the pricing, what happened, and we have shown you December that the peak prices was in around April and May. So for Santa Clara County, it peaked in April at 1.95, and in December the median sales price has gone down to 1.465. San Mateo County, it peaked in April for 2.25, and it came down to 1.539. In Alameda County, the peaked in May for $1.5 million, and in December it went down to 1.05. And then San Francisco County went up to 2.05 in April and came down to $1.55 million in December. And as for Contra Costa County, it peaked in May, 980,000. And then also the pricing at December of 2022 had come down to 755,000. So what does it mean? So if you look at Santa Clara County month to month percentage, it dropped about 6.81%. And if you look at year over year, it's about 12.64. But if you look at from the peak, which was in April, right? Like year over year, we look at the last year's number, but the price from the peak, that's how much it has gone up last year in the first 4 months. It dropped about close to 25%. And as for San Mateo County, month over month, the pricing had dropped about 9.74% from November. And then year over year, it dropped about 14.5%. And the price drop from peak, it was 31.6%. And Alameda County, it dropped about 9.33% from last month, and year over year, it dropped about 10.26%. And the price drop from the peak was about 30%, which was in May of 2022. And San Francisco County, it actually went up slightly for 3.3% compared to November. Compared to last year, it dropped about 8.82%. And from the peak, it dropped about 24.39%. And lastly, Contra Costa County, it dropped 11.7% from last month. From last year, it dropped about 8.5%. And then it dropped about 23% from May of 2022. It's quite significant when you look at how much it has gone up and then compared to the peak. But then if you look at 1 year number, it did not drop as much. It's to show you how much it has gone up in just the first 4 months of 2022. All right, so here you go. David Stevens, who is a former Assistant Secretary for Housing, he said, so we advise this may be the one and only window for the next few years to get into a buyer's market. And remember, as the Federal Reserve data shows, home prices only go up and always recover from recessions, no matter how mild or severe. And long-term homeowners should view this market right now as a unique buying opportunity. Actually, usually, I would question a little bit about what they say, but I honestly feel like this time of the year, especially right now, December, we had already told a lot of our buyers, hey, be sure to come and don't stop looking if you're serious about buying, because December, we just had such a slow market. We didn't have a lot of inventory. The only thing is hard was that to find that perfect home. But if you do find that perfect home, it was actually a really good time to buy because you get to negotiate. January right now, we still see relatively slow market, but I'm going to show you in a little bit regarding how the offers happen like in different cities. This is what's been going on. And there are a lot of properties that are not receiving any offers. But then if the properties are in a really good location, it's like remodeled, and it doesn't really have any defects per se, meaning that it doesn't have, let's say, a weird floor plan, or the location is not good because it's close to noise and stuff like that, it typically is still getting quite a bit of interest. So as an example that you see, for example, in Mountain View, this townhouse asking for 1.15, they did receive 7 offers and went up slightly above the asking price. But in Fremont and San Mateo, there are these single family homes. It wasn't too bad. It was on the market still for a short period period of time, but they only got one offer and slightly below their asking price. Cupertino, they had like the asking price is 2.2, close to 2.2. They still received 5 offers and within 6 days, and it went above the asking price by about $200,000. And here is another single family. It's not as remodeled. This one only has 1 bathroom, so already have a smaller buyer pool, and asking price 1.4, but they received 2 offers initially, but they both under asking, and then they just needed that one person to offer above just slightly above 1.4 with no contingency. So we still see no contingency offer on this in this market, believe it or not. And here are some interesting thing here. Santa Clara, this is a 1-story model townhouse, and if you're looking at townhouse, you'll know how hard it is to find a 1-story townhouse, because most of the time it's 2 stories or even 3 stories. And this one asking price was $800,000. They received 3 preemptive offers, 1 pending, just 1 day, and they got cash offer, and they actually accepted the cash offer over the financed offer, even though the financed offer they're higher. We see this over and over again in this market. It's like a lot of times sellers, they would much rather to accept a cash offer, even though the offer might be lower price, just because they don't really want to risk the financing right now. If the interest rate just shoot up all of a sudden, they're afraid that the buyer may not qualify. So that's why a lot of times we do see this more often than before, is that they would accept an offer, a cash offer that's lower than the other offers. Same thing, this one, remodel updated single family, almost 1.6, got 8 preemptive offers. When we say preemptive offer, it means that it's not even deadline yet. They just submitted an offer before the deadline. It was only 4 days on the market, and it already went way above asking price. We don't know exactly what is the accepted price, but just seeing that there are 8 offers within 4 days, that says something. But on the other hand, you'll see that some other homes that are not as updated, they only get 2 offers and they're all low ball, so they went below asking price. And the same thing here, San Jose condo, $740,000 asking, but they only got 1 offer, so they accepted an offer that's below asking price. So definitely work with your agents to make sure they understand or see how many offers they are. Don't just go in and then make an offer above and beyond. So there are some instances, some situations, and some properties, they do still receive multiple offers, but even multiple offers doesn't mean that they're always way over asking, because they only need one buyer who is willing to pay above and beyond, right? But these 2 offers, they're both below asking, and I would say that the 3rd offer probably could have just made an offer right at asking, still can get it accepted. Let's look at the mortgage rates projections now. If you guys paid attention, the 10-year treasury yield actually had come down a little bit, and 10-year treasury yield kind of correlates with the 30 years mortgage rates. As an example, on January 13th, you'll see that jumbo 30 years fixed is about 5.12%, and this is provided by Wells Fargo, by the way. Today, the 30 years fixed jumbo has come down to 5%. If we look at all these agencies, Freddie Mac, Fannie Mae, Mortgage Bankers Association, National Association of Realtors, very interesting. So as you see, Freddie Mac, they haven't updated their numbers, so they're still the same as last time I reported to you. They should have come out with their new numbers in February. And then Fannie Mae, they have adjusted their numbers quite drastically. Last month when I reported to you, it was like way up, it was over 7%, but now they came back down with their projections down to 6.5% for the first quarter of 2023, 6.4 for 2Q, 6.2 for 3Q, and 6% for 4Q. And they are projecting the mortgage rate starting to come down. And same thing for Mortgage Bankers Association. For December number, this was the same number that I showed you last month. They are projecting that it peaked around the first quarter of 2023 and is going to start coming down. And same thing, National Association of Realtors, they have adjusted their projections. So they're projecting that the mortgage rate also peaked 1Q 2023 and it started to come down. When you look at these numbers, start planning ahead, right? Because once people start seeing the mortgage rate starting to come down, we're probably going to see even an increase in demand as well. And a lot of times now, a lot of economists starting to say that this recession is going to be mild. The rate hikes have begun to quell US inflation. They're starting to see the US inflation is starting to come down. At least it's towards the right direction, not where they want it to be yet, but then it is towards the right direction. And over here, though, it does say that they don't expect the Fed to raise rates as high as investors prefers, but future prices suggest that the market thinks the central bank will implement 2 more quarter-point hikes and then stop. All right, so Linda Hersey, she's a director, news reporting for Real Estate News. It says temporary rate buy downs are a hot trend for mortgages as borrowers face high costs for home loans. So some buyers are exploring alternatives to traditional mortgages in the period of rising interest rates that is expected to continue into 2023. Buy downs are a less costly alternative to traditional fixed rate mortgages. We actually had this episode last month or last year in December, so be sure to go back and review. This is where we had invited Sean Crowley to come and talk about how do you use this buy down to negotiate with the seller and also help your buyers to get a lower mortgage payments. Thank you so much everyone for attending, and I hope that you guys will have a safe investment in 2023. Thank you. Bye.